The Rebel Capitalist Show.
I think that we could have gone into another commodity super cycle in March or April of 2020. I remember when oil got to whatever it was, negative $38 a barrel.
Yeah.
I think that could have been a bottom, just like we saw a bottom back in 1996. And I remember I spoke with Jim Rogers about this, and I just recently listened to his book again, Hot Commodities, that he wrote in 2003, 2004. I think it was published in 2004. And he was talking, and then he set up the Rogers Commodity Index, by the way, in 1998. And he was talking about, commodities going higher and maybe maxing out around 2015. I think they maxed out about 2011. But usually those super cycles last about 10, 15 years. And when I was listening to his book, every single argument that he was making from a fundamental standpoint for a commodity super cycle back in 2003, I see it all playing out right in front of our eyes again. I mean, what he was talking about is playing out to the T today in 2020, 2021, and 2022. So I'm sure you've done some work on that. What do you think about this idea that we're in another commodity super cycle that will take us, let's say, to 2030? When you'll own nothing and you'll be happy, right? Or maybe even further.
I love Jim Rogers. He was one of the first guys who kind of really got me tuned in. I started listening to that man years ago, and I said, "This is a smart guy." And yes, he's absolutely right. And you're absolutely right too. Look, there's no doubt in my mind how this will play out. I mean, I've never wavered from this, not even for a split second. We are going to see commodities skyrocket at one point here. And it's just coming down to a simple movement of cash. And are we starting to see it now? I think, look, commodities are priced in dollars. Okay. And that's where we're seeing a lot of the effect of what's happening now. It's been wavering around a lot, but obviously much higher. But for me, again, commodities are going to skyrocket when we do get that big movement of cash leaving the debt market, leaving the stock market, making its way into commodities. Obviously, gold, silver included in that, platinum, palladium, and again, my view is the market cap of cryptos is going to.
That's really interesting, Greg, because I always look at it from a standpoint. I'm just writing down some notes here. I always look at it from a standpoint of just strictly supply and demand, but I haven't even thought about it from a standpoint of capital flows.
Yeah,
that's
what it comes down to.
That's a really neat take.
Yeah, it's just how it's going to. Honestly, I can't think of another way that it's going to work. And I believe me, I have pondered this upside down, backwards, and sideways for many, many, many years. And that's what I've explained to people, how it's going to work. It's just cash. See, right now, look, the market it's risk on, despite the fact that we're in this corrective phase. We're not even far off of new record highs right now with regard to the market. It's still, in my view, a game of risk on. And that means cash moving into the equity market based upon what's happening in the debt market, rates being artificially suppressed from here until kingdom come. But that's going to change. You're going to get risk on, is going to go risk off, and cash is just going to move. It's just going to move. Capital flow, like you just said, just going to move into other assets. And I think that movement is going to be extremely rapid. It's not going to be a slow burn. You're going to see at one point a rapid spiking in the 10-year yield, and that will again melt the market, like you had said earlier. And then that cash is just not going to go to money heaven. It never does. It's just going to move from risk on assets to risk off assets, and into other things too, like cryptos. That's how I see it playing out. And that's what I am preparing myself for. And that's, people say to me, "Hey, Greg, why do you hold gold and silver? It doesn't pay a dividend or anything like that." I happen to like dividend paying stocks. No, it doesn't pay. These things don't pay dividends, but they will pay dividends in the future when we see this move. Why do I hold cryptocurrencies? Because I think the same thing is going to happen here. I just can't imagine it's going to work out another way. Could I be wrong? Maybe. But it seems like it's making sense to you, and it makes sense to a lot of people that follow my work, that's how it's going to play out eventually. So I don't think about when it's going to happen. I just know it will. at one point for the, and you know, I tell my lions, the people that follow my work, my traders and everything, that you trade the market you have, but you set yourself up for the future as well at the same time. I think we have it covered from every angle. I really, really do.
Yeah, you know, that's really interesting when you think through capital flows in the bond market and the equity market. And you got to realize that if you're holding it, if you're a normal investor right now, not a huge financial institution that's probably using that 10-year treasury to somehow engineer their balance sheet. But if you're just a normal investor, you're getting, let's say, 2.5% interest. And so you have a guaranteed loss right there as of right now at, let's just call it 5-6% per year. And in real terms, or in reality, I should say, you're taking a bigger hit than that in purchasing power if you're going to be using that treasury in the future to buy goods and services, right? Because we know that rate of inflation is a lot higher than the CPI. So that said, think about how much capital is not in the bond market and over in the equity market as a result. Even though prices of bonds are very high, there's still a ton of capital that's in the equity market as a result of these negative real rates. So then the question becomes, how much of that capital would still be in the equity market if we actually had positive real rates? And I'm not saying the Fed takes us there, but to your point, you have a blow up in the market, and then all of a sudden those 10-year rates need to go positive because the market is going to say, if Jerome Powell, if you're not going to squash inflation, we're going to do it for you. And so then if we're at 8% CPI, then the market goes up to 9 or 10%. And then that's going to have an equilibrium effect where that's going to suck all that capital out of the equity market back into the bond market. And I'm not saying that rates would go back down to 2.5%, but they would be, instead of going to 15 or 20%, now they're still at 10%, but that's sucking all that capital out of the equity market, because now you've got a real yield in the bond market. It's being forced upon the central planners. That's an interesting concept that I really hadn't thought through prior to that.
It's an amazing thing to think about, honestly. The question, it really is, where would the stock market be if we had anywhere near a normal rates of normal yields on the bonds? I mean, who knows? It wouldn't be anywhere where we are now. I mean, not even close. I mean, look, I know what's going to end up happening is when we do get that meltdown in the debt market and that pressure on the stock market, it's going to overcorrect. It's going to overcorrect in a massive way. So there is going to be deals to be made, things to buy. But where's the bottom? No one knows. It's a black hole. You see, what people don't realize, and maybe people that follow your work do, and people that follow my work have been made aware of this. When we had Dow 6,000, that's when the Fed stepped in with QE1. Where was the bottom? No one knows where the actual bottom was. It could have been way lower than that. So we could see a sell-off in this stuff. If we were to get anywhere near what you're talking about with regard to the 10-year yield, we could see an 80% sell-off on the S&P 500, 80. And what would that mean? Well, to me, I would be buying at an 80% drop in the S&P 500, but it's very possible that we could see that, and all that cash is just going to move. Like I'm telling people, a tsunami of cash is just going to move into other assets, and it's going to be epic. It's going to be biblical. That's how I've been telling people.